Thank you. Good morning, everyone. Thanks for taking the time to attend the Asanko Gold presentation. Just a reminder, I will make some forward-looking statements during today's presentation, and also please note all dollar figures in the presentation are in US dollars. So those of you not familiar with Asanko, we are a producing gold mining company. We operate our namesake mine called the Asanko Gold Mine. It's located in Ghana in West Africa. We built this mine back in 2016, so it's been in commercial production now for about 3.5 years. This year, we expect to produce about 250,000 ounces of gold from the mine at an all-in sustaining cost of around $1,060 per ounce. Now, last year, Asanko entered into what was really a transformational deal for the company. We actually formed a joint venture over this mine with Gold Fields Ltd out of South Africa. So the Asanko Gold Mine is now a 50-50 JV between Asanko and Gold Fields, with Asanko as the operator. The reason for doing that is it allowed the company to clean up the balance sheet. We were able to repay all of the project-related debt that we incurred to be able to build the mine, and to go forward now, building cash on the balance sheet, completely debt-free. Just to look a little bit about our shareholder base and the investor information. Gold Fields, as you can see here on the left-hand side of this slide, are not only our joint venture partner, they're also a strategic investor in the company, owning just under 10% of the equity. We do have, 5 key shareholders here who comprise about 50% of the outstanding capital, including Ruffer here out of the UK, who own 9.1% of the stock. We do trade on both the TSX and the New York Stock Exchange under the ticker AKG. And I think yesterday, our close, we were trading at a market cap of approximately $200 million, around 90 cents US. I'll talk about the balance sheet in slides coming up here shortly. First, just looking at the operations. On a 100% basis here, the Asanko Gold Mine. As I mentioned, we brought this into production in 2016. You can see the top right-hand graphic there. The blue bars are gold production per year over those last 3 years. You can see we've been ramping up the mine over the last 3 years and investing capital to be able to do that. As I said, our guidance this year was for 225,000 to 245,000 ounces of gold. Year to date, at the end of the third quarter, we'd produced almost 185,000 ounces. So we're well on track to meet our production guidance this year, and in fact, probably exceed the upper end of that guidance. The bottom line is the mine has been producing stably now. I think this was our 5th consecutive quarter of just over 60,000 ounces. So day in, day out, the mine is delivering on the production front. From a cost perspective, you can see here our all-in sustaining costs. Our guidance for the year was between $1,040 and $1,060 an ounce. Year to date, 2019, we've been running about $100 an ounce higher than that guidance. And what's causing that overrun in the cost there is effectively we've been busy doing a major capital stripping program at one of our main pits called Nkran. For about the last 18 months, we've been investing between $15 and $20 million in a major pushback to open up the second phase of ore at Nkran. So whilst we've been capitalizing that stripping, all of it has been brought through the all-in sustaining costs on the quarter that's incurred. So what you're seeing here is perhaps artificially high all-in sustaining costs for the first 9 months of this year. We've since completed that stripping program. We'll expect in Q4 that the all-in sustaining costs are going to come down quite substantially and maybe even be artificially low. So all in all, average, we expect to be very near to our all-in sustaining cost guidance there for the year. And what that's meant is we are generating a significant amount of free cash flow. So on the bottom graphic there on the right-hand side, those blue bars are cash flow from operations quarter over quarter for the last year. Importantly to me, the gold mine is the actual free cash flow. So that's cash flow after reinvestment in things like capital stripping and in exploration. And you can see if you go back to 2018 and the first quarter of 2019, we were investing all of the cash flow from the operations back into capital projects and even some of our treasury. As we started to taper off that capital spend program towards the middle of this year, that free cash flow started to be generated in Q2. And Q3, we generated just under $14 million in free cash flow from the operations, with about $45.5 million in cash flow from operations. Looking forward to Q4, we'd expect that gap between that gold line and the blue bars to actually close. So still strong generation of cash flow from operations, but instead of spending $15 to $20 million on stripping, that'll actually be free cash flow, coming out of the mine. So what that means is we are well positioned to be able to start returning some of that capital out of Ghana and back to the joint venture partners and generating a return on our invested capital. So looking at what does that mean for the balance sheet? Starting first with the JV balance sheet, so at the joint venture level, that's the pie chart that you see on the bottom right hand of this slide. At the end of Q3, we had about $46.5 million in cash. We also have a $30 million undrawn revolving credit facility that's in place at the joint venture level. So total with about $77 million in liquidity, more than enough to amply run the mine, especially given the fact we're generating strong cash flows here in Q4 and into 2020. So as a result, we're expecting now to start distributing that, as I said. So looking at the Asanko Gold Inc. balance sheet, that's our cash balance on those top blue bars on the right-hand side there. We finished the quarter at the end of Q3 with about $14 million in cash. We are expecting here in the fourth quarter to receive the final payment for 50% of the joint venture from Gold Fields. They still owe us one last payment of $10 million. It's due before the end of this year. That'll bring our cash balance up to about $26, $27 million. And then we're expecting now to distribute initially $20 million, $10 million for ourselves, $10 million for Gold Fields here this month, actually, from the JV. So again, we'll be sitting here with corporately about $36, $37 million in cash. What do we intend to do with that? Some of you may have seen that we have started to actually talk about putting together a plan to return some of this cash to our shareholders. We have filed what's called in Canada a normal course issuer bid. That was approved by the TSX last week after our third quarter board meetings. And we are now this week starting to buy back our stock on the open market. We can buy up to 5% of our stock back. Just to put that in perspective, 5% of our current market cap is about a $10 million investment. And we think that's an appropriate risk-adjusted return for our shareholders at this stage. Longer term, we would like to consider putting in place a dividend policy. Obviously, before we do that, we want to make sure that's something that we can continue and have as a stable policy going forward. And so what we're waiting on to be able to enact that and to review that is the finalization of the development plan for the mine on a go-forward basis with our joint venture partners. So as some of you may know, we are in the process of updating our reserves and resources and the life of mine plan for the Asanko Gold Mine. We announced back in August the direction we're taking with that is going to be to focus on the assets that we have existing, which are shown here on the sort of our concession map on the right-hand side of this graphic. Our resources occur predominantly in two main pits where we're mining right now. The Nkran pit, which is where we've been mining since 2016, is the center of those two circles on the bottom of that concession map. And the Asasi pit, which is the northernmost concession, where we haul ore about 27 kilometers on that red line that connects the processing plant to that northernmost pit. The updated life of mine plan, we're mining from both of those pits right now, will be based predominantly on those two pits with some ore coming from the satellite pits. That will give us, we believe, about an 8 to 10 year mine life, producing about the same amount of gold were produced in 2019. That's without spending any significant amount of development capital. Now, where we can see some real upside to that life of mine, and we've committed $10 million to, is on the exploration front for our 2020 budget. This is a largely unexplored district-scale land package on one of the main gold belts in Ghana. We've got over 21,000 hectares here. There's a history. We've found multiple multi-million-ounce gold deposits on shear corridors, which are the orange-colored structure you see here on this graph. We expect there's a significant probability of finding more. We are focused drilling right now on the Fremenda target, which is the southernmost red star at the bottom of this graphic. So you can expect to see drill results out of that this quarter. We believe that has the potential to be another Asasi or another Nkran. As well, we are looking at drilling within that 10-kilometer radius, that outer circle around the processing plant and the Nkran pit, to allow us to find some near-surface resources which will augment our near-term 3 to 5 year mine plan, looking to try and improve our margins from what's going to come out in the updated life of mine plan. And we expect to publish that in Q1 of 2020. So just to summarize, in conclusion, I do think the company has started to generate some momentum. We are perfectly placed right now to deliver a strong gold production profile with limited capital expenditures into what's shaping up to be a strong macro environment, and as a result, generating a significant amount of cash flow. As we've started to articulate this strategy to the market here in the middle of this year, We have started to gain some momentum, and we are now outperforming our peers and the gold price. That blue bar on the right-hand graph is AKG on the New York Stock Exchange against the GDXJ and gold. So whilst we have had some re-rating, I think the real re-rating is still waiting to come here in Q1. The important catalysts are going to be for us to get that life of mine plan out and get it in front of our shareholders. Hopefully sprinkled on top of that will be some solid exploration results and a significant return to capital as well. Thank you very, very much for your time.